Welcome, everybody. So, for those who are new to the REI Genius, our $1 Million Coffee Hour, I'm Johnny Lynum, the founder of REI Genius, military veteran turned full-time real estate investor and educator. I'll say real estate investor maybe 12, 13 years ago when I bought my first true rental property back in 2013, and then, started as a fix and flipper in 2015 and got into commercial space in 2020. And now, today, we're going to really be talking about the accredited investor blueprint. So, three powerful, actionable strategies that high income professionals, veterans are using right now to build tax efficient cash flow and to protect their wealth. So, really, it kind of goes in on three key things when it comes to the most recent legislation with the Big Beautiful Bill, which offers significant benefits for those investing in oil and gas, commercial multifamily assets that are eligible for 100% bonus depreciation. And then one of the vehicles that I really love and I see a lot of my clients leverage and use is the self-directed rate, which allows you to invest in alternative investments. So take money that was in a TSP or a qualified employer plan that you're able to take a subset of those funds or all those funds, depending on how active or how aggressive you want to be, and moving them into a self-directed IRA that you control and you can direct the investments. Whether you want to buy ETFs, you can buy other mutual funds, stocks, by yourself that you can control, or you can buy more alternative investments, so real estate, syndications. You can deploy the capital, Bitcoin, different funds in crypto and things like that. It just opens up the aperture completely on the opportunities that you have. So a lot of advantages, and we'll talk about some of those things. So today's environment is no secret. Inflation is climbing, interest rates are rising, the stock market is more volatile than ever. If you're like many accredited investors, you're looking for alternatives that offer stability. You want to look at find that cash flow, but at the same time, you have to have that tax efficiency all coupled in. And here's the truth, everybody. Most traditional portfolios that track Wall Street in the market, they won't deliver that. But with the right alternative investments as a portion of your portfolio, you can help you achieve that alpha that everyone's seeking with their investments. And one of the things that we have to realize with the economic challenges, like everything's getting more expensive, everyone's living longer, and one of the big risks, and Fidelity wrote an article earlier this year about it, is most people, the number one fear that they have right now is that they're going to outlive their money, that they're going to live longer and they're going to run out of retirement funds. And ways that you can, and their recommendation for that, guess what? Is stay in the market longer. So stay in growth stocks longer, which now your nest egg is more susceptible to the ebbs and flows, the roller coaster of Wall Street. And so one way to take some of your chips off the table, to diversify away from some of that risk, is to own assets with your portfolio. And so we're going to talk about, some examples for that and the tax advantages that come with it. So strategy number one, so direct ownership of multifamily real estate. One of the, I would say, blue chips when it comes to cash flow in real estate. We all know, traditional single family rental properties. And for me, that was the process that I started with my journey, with leveraging my VA loan. And from there, when I PCSed or moved to a new duty station, guess what? That previous primary residence that I bought 100% financing with the VA, didn't have to put any money down. Now it converts to a rental property. And I did that, consecutively three times. And after the third time, I was like, okay, let's look at doing this more frequent and become a true investor now that we're built up a portfolio. And so, going down that path, we eventually got into fix and flips in 2015, started keeping every couple of houses. We would hold back and kind of do the bird strategy where we would buy, renovate, rent it out, refinance it, then repeat and do it all over again and keep those as rentals and have instant equity and cash flow. That was a good model. It helped defer some of the taxes. But in 2017, with the tax act that was passed, it brought a thing called 100% bonus depreciation into play, which changed the landscape with commercial real estate, where it allowed you to accelerate all the depreciation that had a schedule of under 20 years. Then you could take all that depreciation in the very first year ownership all at one time. And I'll show an example of what that looked like with my first 18 unit. But one of the things with multifamily, on top of just the tax strategies, is the cash flow. You have more units, more income. If you have one vacancy, guess what? you have more units that are still cash flowing, that still paying you each month, still paying their rent while you have one unit down. Because guess what? One thing that I learned with only having like one rental property, that once you have a vacancy and somebody moves out, you go from 100% occupied to 0% occupied really quick. And when you have two properties, you go from 100% to 50%, which is still not ideal. And so being able to go into multifamily units that you're able to achieve those economies of scale, you're able to protect your cash flow and not have those large perturbations in your cash flow when someone moves out and when someone vacates the property. But the other great advantages, that come with multifamily is the long-term appreciation. I tell my clients all the time, and I talk about, our first multifamily that I bought in 2020. In less than 2 years, we had an initial cost basis of $1,050,000, and in 2 years it appraised for 1.76 million. And we only put about $70,000 worth of renovations in it. And that whole story where 50,000 of that came from the insurance company because we assumed the insurance claim when we bought it from the previous owner because there was still work that had to be done. And it just allows you to now improve the value. So great benefits of having direct multifamily ownership uh, can directly have a bottom line impact to your portfolio, the cash flow that you're able to bring in on a monthly basis, and it appreciates with time. We all know real estate is a great hedge against inflation. We saw it right after COVID that inflation spiked. The government we printed trillions of dollars. It was, I think we with 3 kids, I think I may end up getting like over $7,000 in stimulus checks during that period of time. And so with that, there was a lot of money that was printed from the Federal Reserve. And guess what? When you print a lot of money, inflation goes up. And so we saw that real estate is a true hedge against inflation, where we see those who own property over the last 4 years that anywhere from 30 to 40% easily appreciation in the value of your home. Just because it was a hedge against inflation, it's going to take more of those dollars that they're printing more of to buy your property, your asset. And so that's the thing that we see here with multifamily, that it's a great hedge against inflation. In this example here, so going into my first multifamily that I was sharing, we bought it for $1,050,000, the down payment, $210,000. And our first year bonus depreciation was $186,000. So essentially, if I took 210,000 from my gross income from that year and I put it as a down payment buying this 18 unit, that, oh, by the way, that produced $15,000 a month, the mortgage payment on it was $4,400 for the principal and interest. And then insurance was about 600, I would say closer to $700 a month. And then taxes were about the same, about $800 a month for this property. So all in a little bit less than $6,000 on a monthly interest, principal, interest, tax, and insurance payment, just like you would have for your mortgage. A little bit less than 6,000, but the property was producing 15K each month. And so with that, putting $210,000 down, I can wipe out nearly over 90% of that in the first year just because of bonus depreciation. And then I think we're getting around $30,000 of depreciation each year after the very first year. And so this is how it breaks down. You can't depreciate land. And so the percentage of the land that was allocated, you can see there 84K. The building cost over 27 and a half years. We couldn't deduct all of that in year one. So that was spread out over 27 and a half years. But then everything that was below 20 years, 5-year and 15-year property was all able to be depreciated in that very first year, which came to that 186K. So great strategy there. I'm investing in oil and gas development. So this is a new one that I've gotten exposure to as I'm going through and studying for my securities license. And right now, and you'll see here, we're going to do a launch. I think it's going to probably end up being early September. I'll let you guys let the cat out the bag now, but I'm going to do an early launch. I partnered with Right Time Financial here in the DC metro area, and I'm going to be leading their alternative investments for all their financial advisors. And so that'll be something that you guys will kind of see, and we're going to have a big virtual launch, and maybe something here in the area live too. But with that, in studying for my securities license on my alternative investments, really getting exposure to oil and gas and seeing the power of how wealthy individuals or credit investors are building wealth by investing in oil and gas. So recent legislation, the 100% bonus appreciation applies to this, where any remaining tangible equipment costs that are bought in regards to the operations and the drilling of the wells, that you can also depreciate that equipment 100% in the very first year. But the really cool thing with oil and gas that's unique to it is that 100% of the indirect drilling cost, the IDC deduction, that you're able to deduct anywhere between 75 to 85% of your total investment in the very first year that you make it. And so this is huge, where you're able to offset income in the very same year, just like you're able to do with the commercial real estate. When I just showed you that example with that first year depreciation, with oil and gas, you're able to do that and without actually having to operate and buy the property outright yourself. And so that's one of the great things with being able to invest in oil and gas with this strategy. And so, example here that I think is really good. It just shows what 100K initial investment in an oil drilling partnership, that tax deduction would be 85K write off of your gross income for that year. And so, for someone that's in like this 37% tax bracket, that means you're saving $31,000 off your tax bill for that same year. And so that's $31,000. Guess what? That now that you can go and invest, put back into your self-directed IRA, go buy whatever, you go on a nice vacation with your spouse, whatever it is, it's your money. It's not going to the government, and you can do what it is, do whatever it is that you want to do. And the great thing is with this investment, that normally with the funds that I'm seeing right now that are doing one that are doing true exploration, that there's one company that's looking to do U.S. Energy. I think their fund is set up for a 5 to 7 year hold, and they have a preferred return of 8%, and which production starts, that they see that going up over 10% annual cash on cash return on your money. And then there's another fund that's looking, they buy existing wells in Texas and Oklahoma, and they do exploration, where they're going in and doing vertical drilling off existing wells. So it's a lot less risk, and they have a 7% preferred return. And so there's different things. So when you're investing your money, you're getting immediate tax break, and you're getting passive income cash flow. And eventually, when the fund sunsets in 5, 7 years, that you're getting your return of principal as the oil reserves continue to come into production. And eventually, once the oil well is completely tapped out and it's drained, then the fund would sunset, and you will receive your remaining share of the equity in the deal. And so, great opportunity there on the oil and gas side that a lot of times you just don't get exposure to, depending on the different circles and rooms that you're in.
Question,
Strategy three.
Johnny.
Uh-huh.
So this one's gonna be focused on, like, we already have like which areas, it's gonna be at. The location in terms of the drilling.
Yeah, so it really depends on the company and where their focus. The most recent ones that I've been exposed to with our advisory firm, that allows you to, they're looking at Texas and Oklahoma. That's where their operations are set up. But you also have offshore drilling. You have drilling, in Alaska, the Gulf of Mexico. So it really just depends on the company and where their operations are set up. And so there's different opportunities, and so like with the Texahoma, they've been operating for over 40 years, and I think they're doing right now a $50 million fund. U.S. Energy, they're doing a $125 million fund, and you can, the initial investment start as low as $25,000 to $50,000, just depending on what they're approved for. So it just depends on a case by case basis. But we're able to share that with accredited investors, and we sit down I'll sit down one on one and kind of walk through those details. And you can kind of see those and see what's a good fit for you in your portfolio.
Yeah. Reminds me of John D. Rockefeller.
Yeah. Yeah, the oil and gas piece, that there's a lot of opportunities there to diversify, because that's what it's all about. Tony Robbins wrote a book that came out earlier this year about the holy grail of investing. And his thesis was, and he sat down with a lot of wealth managers, hedge fund managers, billionaires on Wall Street, private equity CEOs for these different funds. And the goal is to look for 7 uncorrelated investments. and being able to look at how you can get into these different investments, alternative investments. And that's how the wealthy invest. That's how they protect their money. That's how they grow their money because they have these asymmetric returns that are outpacing Wall Street and give you all this different exposure that you don't necessarily get by just buying a normal ETF or buying a normal just stock on your out of the brokerage. And so that's some of the things here that allows you to kind of diversify. But going into strategy number three, the tax advantage investing, self-directed accounts. Like this is an extremely powerful tool to allow you to diversify outside of a qualified plan. A lot of people, I think the number is close to like it's over the 100 billion mark of how much previous employer 401k or qualified plans are just out there that people have left the employer and they don't know where they forgot the money. They forgot that they had an actual pension, not pension, but qualified plan at that job. And so there's a website out there like you can check your name and social to see if you have IRA money. I looked it up. I'll share it in the community and drop that in the chat. Just shoot me a private message, LinkedIn. If you want that website, I'll dig it up. But there's a website where you can go and see if you have like employer, retirement accounts that's out there that you forgot about. But with having a qualified plan with a former employer, that you can move that money without incurring a penalty to move it into a self-directed IRA or individual retirement account. And so it allows you to, if it has a Roth component, there's Roth, self-directed accounts as well too that are completely tax-free returns. But then, most of those 401ks are going to be tax deferred until you take distributions on those accounts. But you're able to invest passively in real estate syndications. You can become a private lender with lending directly to other real estate investors. No capital gains tax on the sales within the account. And there is some legislation now where you can blend multiple retirement vehicles that you own as well too. So a lot of opportunity with former employers. This is huge for a lot of a lot of people with layoffs that are happening in the IT space as well as government space as well too. That now once you leave that employer, you're able to tap into those qualified plans, move into a self-directed IRA, and now invest in a lot of these alternative investments that previously, based off the custodian that had that qualified plan, you're limited to just a few mutual funds, ETFs that you only can invest in. And so a lot of opportunities there with that. So here, great example, investor used 150K from their solo 401k. They invest in a multifamily syndication. They get the income, the equity gains that accumulate tax-free inside the account. You have the compounded returns that we all know that we get with being able to reinvest the returns and the gains. And you have the flexible withdrawals on the back end. Of course, once you 59 and a half, you're able to start doing those withdrawals and access those funds, once you hit retirement. And the cool thing that having the self-directed accounts that you have, so essentially you're instead of buying the property in your personal name and you getting the monthly cash flow checks, now, usually with like the multifamily distributions are quarterly. Now those quarterly checks are going to your retirement account and funding your retirement account versus going to your personal check account. And so now that's how you're building wealth. And so now you have access to those accounts and you can have one self-directed IRA and you could have, a portion of it, 20% in a syndication, 10% in crypto, a crypto fund. You can have 30% that you're lending out to, fix and flippers. And now all those interest payments and return of principal, it all goes back to your self-directed IRA. Big things really, this was not to kind of go in detail. Would love to sit down one-on-one and kind of, get a good picture of what you're building, your financial strategy that you're implementing now, and looking at how like some of these alternative investments and maybe even any questions that you have on how these different investments can help serve you and help you diversify your portfolio going forward. Because that's the big thing that we all got to focus on is how do we protect our wealth? That one, we got to invest it, but we also got to make sure that we are being a good fiduciary and that we're minimizing our risk exposure at the same time. So this is the whole reason I created this blueprint. So we're going to make sure if you don't have my email, I'm going to send out kind of the 4-page white paper that I put together. But I really wanted to kind of just tee this up to you guys first before I send out the white paper and do that. But the whole reason that I created, this blueprint is because I've seen the transformation in my own life with how I invest and how I make decisions and the lives of my clients that I work with, many of them being veterans, executives, and other busy professionals. But the thing is that it's not about working more. It's about making your money work harder than you and being able to focus in on how do you build wealth. So would love to get you guys on my calendar and book a time. Um, and really just sign up if you're interested in seeing these type of opportunities. I have a accredited investor club, and so the portal, just go to the link right there and you sign up. You'll get asked a couple questions that we have to do to be in compliance with the SEC, but I'll approve the account. And then you can start seeing like the multifamily deals, the oil and gas deals that we'll be putting up there for accredited investors, and really stay in tune with everything that's going on in this space. So, but it's a great time to be an investor. Think a lot of times the media and what you hear a lot of the negative, and they focus in on the higher interest rates on mortgage rates, the inflation. And the thing is, like with all this negative news, the big beautiful bills, like always look at where's the opportunity, because wherever there's pain, wherever people are talking about the disadvantages, there are always advantages if you know how to position yourself and if you have the right long-term strategy. So with that, I'll open it up for questions, discussions, and yeah, and today we're going to look at maybe doing a little bit of networking as well too. Any questions, thoughts? Anybody kind of seen anything similar or okay, cool, cool. Was that value add? Just I want to do a pulse check, just make sure it was that value add information for you guys.
Yes, definitely.
Okay, I see a head nod for
Definitely.
Dr. Joel. Okay, definitely. Okay.
Mm.
Thank you, thank
I
you, and
think,
feel free with sharing that with other people in your circle that are looking to maybe diversify or looking for opportunities to continue to invest and grow their wealth and do those things. And one of the cool things that's coming up when I do the launch with Right Time Financial, that we have estate planning services with setting up wills and trusts to set up your estate plan with making sure that you pass down your assets in a tax efficient manner, but then also with financial planning services, as well as no kidding alternative investments, which is going to be my focus in this lane as well too. So super excited. I think I got about 54 days officially before I can call myself a true retiree and and be off the books for the Air Force. So a lot going here in the next couple weeks. But yeah, I'm just kind of opening it up. Where you guys at? Anybody have any current challenges in real estate, investments in general that they're working, or any questions?
Well, since we have like, a few new faces that are in, probably would be good to go around, kind of introduce themselves a little bit, what you guys are working on, from where and how people can contact you so we could, kind of know you a little bit more.
Yeah, no, I love it. Who you want to start? We'll start with Dr. Joe. We'll let one our vets go first to kind of give people the blueprint.
Speak on the old man, huh? Good morning. I'm Dr. Joel McLeod. I'm a investor, physician by day, investor by all other time, in Montgomery, Alabama. I've been here practicing now, just celebrated 34 years of my practice, and I'm definitely on the downhill slide, sort of like Johnny. I hope to be retired in a few years. I started with Johnny about three, uh, about 3 years ago. And it really helped me get off the fence, get some properties that I had not done. I've just been studying it for a while. I've got a few single family properties. I usually acquire them using creative financing and particularly focusing on pre foreclosures and making them long term holds, flipping a few of them. But really wanting to learn how to use that technique to get multifamily and taking in all I can, and hopefully in the next 6 months or so, be able to pull the trigger on some multifamily properties, and also looking at some self storage units too.
Awesome. Who's next? Let's go. I'll just go in the order on my screen. We'll go to William next.
Hello, how you doing?
Good morning.
Yeah, so my name is William Johnson, and I started wholesaling. Right now, I'm just working on AI and providing services, and because wholesaling, I'm struggling to get like quality leads, and I can't seem to make it happen. This past couple of months, I've been very consistent working my job and everything, but I've been working on AI on the side and building certain things and business models. So I'm trying to find some clients so I can provide value and get my wealth and acquire some assets so I can be able to grow.
Okay. No, that's phenomenal. What type of business clients on the AI side are you
Uh,
interested in acquiring?
So I made a risk assessment platform, and I'm also working on like an entertainment platform, and I'm also trying to do it's something else. It's for like bilingual cultural um um I can't explain it, but it's an original business model because I like to approach it from a unique way. But I'm trying to work on my own business model and everything.
Okay. And that risk assessments for real estate investors.
Yes, and real estate developers.
Okay. No, that's great. Well, awesome. Well, no, I think definitely, we if you guys are looking or developers online, I'm trying to think to see where we have in the room. Definitely reach out to William and share your information in the chat and definitely connect with us on the school platform in the community where you guys can, that's the hub to bring in the community, connect offline, and to online where you can connect offline and do business and opportunities to collaborate and partner. So no, thanks for sharing that, William.
Yeah, I want to get a few people to test it out. So I want to probably do it for free just to see how it works out for them.
Okay. And so with the risk assessment, is it for existing structures or just new development?
Probably both.
Okay. Okay. Yeah, I don't mind running it through the ringer, giving you some feedback and kind of taking a look at some of the things that we're doing on the acquisition side.
Okay.
Yeah, I'm all about embracing AI. So
Mhm.
Yeah. Actually, William had already shared the file with me. So I'm looking into like sharing it with you guys too. I don't know if William would allow like limited or a certain number of people to test it out for beta testing, or would you be open to like sharing it with everyone in school community and REI Genius?
Yeah, that's fine.
Okay.
oh, no, great, great. All right. Doug, good morning. How are you today?
Good morning, Johnny. Hi, everyone. I'm relatively recent acquaintance with Johnny, also a fellow Air Force veteran, fighter pilot. So I appreciate the work Johnny did as an acquisition officer and his colleagues for getting me some great airplanes to fly around in. Um, Nearing the end of career number two here, and looking to diversify, have a fair amount in equities, but looking for things that, like a couple of things that Johnny said resonated. In particular, looking for steady income where I don't actually have to draw down on that investment. And multifamily real estate sounds like a pretty interesting option for that, but also interested in the other alternative investments that you mentioned. I do have a self-directed IRA set up, so I think you're on the right track there and look forward to exploring the options for getting the full use out of that.
For sure, for sure. No, it's a pleasure having you here.
Thank you.
All righty. Yeah, thanks for sharing, Doug. Let's see who else. Carl, good morning. I know some people may be driving or even in the office. So, Veronica, good morning. How you doing?
Sorry, Johnny, I couldn't get unmuted. I've
No,
appreciated I've appreciated the show this morning. Thank you.
awesome, awesome. Glad to have you. Are you looking for anything in particular on the real estate side at all?
No, I've held rentals before and had a home. Well, it's still on the market now, but I'm living in it presently, and I'm hoping to cash out of it and start doing some real estate investing. But haven't gotten offers where I want them yet, so I'm just going to sit tight for a while. Thank
Okay.
you, Johnny.
Okay.
Thank you.
Yep. Thank you. Miss Figueroa, I saw you come on online there. How are you this morning? Oh, did she fall off? I'll come back to Veronica. Jay, how are you this morning? I know Jay's out on the West Coast, out in the Sacramento market. Nothing heard. What about Kader? Kader, is she online?
Yes, I'm here.
Hey, good morning. How's it
Hey,
going, man?
Hey, it's going great, man. Morning to you all. Yep, yep.
Awesome.
I'm
Well,
up
yeah,
here.
definitely introduce yourself. Of course, I know you.
Yes, sir. Like I said, I'm up here in Virginia, Fort Lee area. Looking to buy multifamily property anywhere, to be honest with you. Um, been browsing around on Facebook Marketplace and stuff. Actually found a deal back home, back Monroeville. Made a few calls in on it, and it's already under contract, so missed out
Okay.
on that one. I found another one down in Kingston, North Carolina, 10 unit.
Okay.
It looks kind of old, but it's been renovated. So I got to get some more education and find out if it's a good deal. But I'm definitely looking to take action. Stop standing on the sideline.
Yeah, no, most definitely. That is great. And so, with both of those properties, especially like the one that's already on the contract, continue that relationship with that broker. Let him know kind of what you're looking for, and then follow up with him on a monthly basis and just see, hey, what he has coming. Because a lot of times it will take maybe 30 to 45 days from once they get a signed contract with a seller to represent them and to represent them in selling their property. So there's about like a 30 to 45-day window that they're getting the marketing materials together. They got to coordinate with the property management company. They come in, take pictures, get drone footage, all those things. A lot of times the brokers may even be out of state. So they have to coordinate the travel, all those things. So during that 30, 45-minute time frame before it actually goes live, that those brokers know that it's coming. And so if you're on a short list, you're calling them like, hey, we just got this last week. We're working on it. It's about 3 or 4 weeks before it goes on the market, but you can get access to that deal ahead of time. Get your offer in, and a lot of times they have a whisper price. And if it makes sense and the numbers work at that price, you can potentially get it on contract before it even goes on the market. And so that's the power of kind of building those relationships and having those conversations and being consistent, following up each month with them and doing those things. So I would say those are all great opportunities to kind of build those relationships. And the one in North Carolina, really running the numbers and understanding that is going to be key. I don't mind helping that, sharing some of that information and kind of go through and put that together.
Oh yeah, I appreciate that. I know you don't mind.
Awesome. Anybody else that's I see JS want to introduce themselves, share anything they're looking at, any challenges that they may have. All right, all right. Well, if no one else give you guys
let's get back
16
to
minutes
Ronnie.
back,
I know Ronnie is gonna be there. Ronnie, I know you're there.
which one is Ronnie?
Veronica.
Veronica. Oh, yeah, Miss Figueroa.
Oh,
There she is.
How you guys doing?
Great, great. How are
Doing
you?
good, doing good. How are you?
That's great. This was a great call. I'm doing great. Thank you. This was a great call. I really like what Johnny was talking about the three strategies of that he talked about this morning. Um what I've been doing, like me and my daughter, we've been looking at you know, you're always trying to see a way how you can generate income to put into real estate. You know what I mean? Like, some people, preach that, oh, you don't need money to do. You need money with real estate. You need money. You need to have money. So me and my daughter's always looking for ways to try to generate income to be able to afford, or like have down payment or closing costs for real estate. So we've been looking at like rental arbitrage, like that, on Zillow. Like, basically, like, we go on Zillow and we look at like, we filter out, like, for renters, like people that want to rent. So they want people that want to rent, because there's a lot of landlords that are, some of them are, don't have renters. Like, they have the home, but they're not, in other words, they don't have nobody to rent it out to. So they're paying their mortgage. So it's causing, a strain. So there's a lot of landlords out there looking for people to just rent, right? So we're looking to, like, do, like, rental arbitrage, like, anywhere in any state, anywhere, any state, and global, where we go on Zillow, we look it up, we filtered out to renters, we filter out to, like, maybe, let's say, 2,500 to 3,000 a month rent that they're looking for. Like, that's the filters that we put in. And they reach out to us and we talk to them like that, because that's what we're trying to do, trying to gain some extra income. And we're looking at it as if we can, like, our threshold is like 1,500 after paying rent, after paying the rent, after getting the rent, and if we're left with 1,500, we know that's a good deal. And we're just talking about renting, like, apartment. We're not talking about right now. Honestly, we can't afford all expenses that come with owning a home right now. Because, it comes with a lot. It's not bad. We're just working our way to it to get income.
Yep.
So that's how we're working on.
No, I think that's a great strategy. Did you see last week's pad split discussion with Hannah, with how how she's
I'm so
transitioned her.
happy you said that. I I got on. It's like I woke. I was like, "Oh my God, I missed the call," and I heard the end of her call, right?
Mm-hmm.
And yesterday, I had a conversation with her. Like, we
Oh, awesome.
talked on the phone, and I was asked. We didn't get into a long, long conversation, but we was talking about. That's what I call. That's what me and her was talking about. In a long, long conversation, because she was very busy. Because I wanted to know, does she teach that? How to go about it? Because that was something I'm really interested in. Because what me and my daughter doing here with rental arbitrage, I was like, well, maybe we could buy a home. We could afford a home after we get, some more money that we could invest, get a home and be able to. So I thought we did think about that.
Yeah, it's no could. 100% you can.
Yeah, that's what I mean. I can.
Yeah. No, you definitely can. So I think, yeah, definitely. And I've been talking with Hannah, so she's gonna be doing some more trainings in the community for sure. So she's gonna be doing
Oh,
some
she's
more.
do more
Yeah,
trainings.
yeah. So she's definitely gonna be sharing more on that
Oh, that would
strategy.
be.
And I think your network with, like, retired police officers in NYC and firefighters, I think that's your niche, your community. You all speak the same language. I think that's the people that you can bring into your immediate circle, your sphere of influence, that can come and be right there lockstep going through this journey with you in whatever model. But I think the big thing is committing to a model and strategy that you're confident in, that you're committed to. And now it's just sharing your vision with your circle, and it's up from there.
Yeah, that is and it's funny because when I heard her speaking, I remember I came in on the end. When I heard her speaking, I immediately knew. I said, "Oh wow," because I like the fact of rental arbitrage, but the way she has it is like you own the property, but you can generate more income. Say you got a 4-family, you could generate more income
Oh man.
per apartment. Like, I mean, I came in on where she was talking about taking a living room and making it a
Yes.
2-room. I said, wait a
Yep.
minute here. I was like, oh, wait a minute. Oh, wow, I could see it. And, I have a cleaning company, right? So,
Right.
automatically, I was like, wait a minute. I could charge a cleaning fee. I'm like, my wheels are rolling. I was like,
Mm.
wait a minute. I could charge a cleaning fee because these places have to be clean. So I'm already, my mind is already going 100 miles. I'm like, wait a minute, this is great. So, we spoke yesterday, but not very long because she was very busy, but she was nice enough to get on the phone with me. And because I really want to learn how to do it, because I don't know how to do it. I don't know what's the legal aspects of it, because you want to do it right,
Right. Right.
but I know it's a win-win. I know that for a fact. I just need
Yes.
to learn how to do it, have the right either coach, mentor, because we all need those things to show me what to do. And
No,
then,
100%. And New York City is the epicenter. It's always had affordability issues and challenges. And so, but
yes,
now we're seeing it across the nation in a lot of areas where you have a lot of tech workers, new jobs coming in, population growth, new people moving there, and these
yep.
high interest rates and the inflation that we've had with the run up and appreciation of real estate now, that a lot of the US is having these same issues. And which is, it's unfortunate, but if you're an owner and you're a landlord, then you're going to benefit from these things. And so now having these strategies where you can rent by the room, and Dr. Joe, correct me if I'm wrong, but Pad Split, they see like people come on the Pad Split platform and they help bring residents to you to rent your units out. So, you're going through and you're paying Pad Split and they're bringing people to you once you come on the platform and say that you have availability and rooms available. They're bringing people on their platform that now they can see your listing and coming in on top
Oh,
of whatever
so
you do, whatever marketing organically that you want to do on your own.
so let me ask you a question. She sent me a link in the RE Genius, and it was for Pass Split. So
Mm.
when you just said something, I didn't know what that was. So now I know. So that's a platform like Airbnb platform. Like you go in there, you put your
Mm-hmm.
property on there,
Mm-hmm.
and then
And
somebody,
somebody that's
oh,
looking to rent a room by and pay by the week, that they know to go on that platform to look for those type of
oh.
properties in their area.
So I could put I'm just hypothetical. Let's say I could put my multifamily property that I have here in New York on that platform and say I have rooms here, and they could go in there and rent my room on just like they go to Airbnb and AirDNA. I mean, not AirDNA, but you know what I'm talking
Mm-hmm.
about.
Yeah. Mm-hmm.
Oh, I didn't know that's what that
Yes.
was. Oh,
Yep.
that's amazing.
Yep.
I will
So it does a
share.
lot of the heavy lifting for you. It vets the people. And the cool thing that she explained, that they rate you as an owner or landlord and you rate them as a resident. And so now that they can see, if you have 5 stars, you can see if they're a bad resident. But a lot of them, like this is if they can't afford to pay by the week for these because they can't afford to go rent a 2 bedroom apartment in the Bronx or Brooklyn or wherever. And so a lot of them, they don't want to get, because if they get blacklisted on the platform, then they can't go and use Pad Split to live anywhere. And so there's, you have that aspect of it too, where a lot of people, they're not coming in just to trash a place. Now, one of the great ones that she shared, as someone that's experienced vandalism of a vacant building, that now, you at least have one person that's living in one of the bedrooms, where you're not going from 100% vacant. If you're renting by the room, you can have 4 rooms or 5 rooms. You have 2 people in there, 3 people in there. So it kind of goes against what I talked about with having one single family and just have one tenant, one lease. Now you have 4 or 5 leases for one single family house that's paying income. So your cash flow isn't going from zero, from $1,000 a month to zero. It's going from $1,000 a month to $750 because you got 4 people paying you $250, or
That's
you're
amazing.
making $250 per room a month.
Oh, so I got to go back and look at that because I didn't know what it was.
Mm-hmm.
And
Yeah, so that's how that's set up.
awesome.
I'll share the replay with you, Ronnie, with the link that Hannah shared for Pad Split,
You
so you
shared
can
it with
create
me?
your account.
You
I'll share
shared
it
it?
with you.
Oh, thank you. So I can look at it. Is there any other recordings about paddling, about pad split? I mean,
I think she was the first one. I know Dr. Joel has been talking about it in
Yeah, they
just
actually
in
have a
passing.
they actually have an educational section on their website. If you go to passplit.com, there's a lot of tutorials on there, education. And one of the good things about them too, Veronica, is that they actually screen the tenants and they place them for you. They send them to you for approval. Once they find somebody, they actually fill the place for you. They keep it filled for you.
oh, that's great. Thank you, Joel. That is amazing. I didn't even know that. Ah,
Mhm.
and that's everywhere, right? That's all states?
Right. Well, I don't know if they're in all 50 states, but they're in most states.
Oh, that's great. That's amazing. All right. Well, thank you. And I'm looking forward to that link so I could go. Oh, you just sent it to me. Thank you, Faye.
That's awesome.
Thank you, Joel. Yeah. Thank you for having me
All
on the call,
right.
Mr. Johnny. I
Yeah,
appreciate it.
always, always my pleasure. Well, awesome, everybody. Anybody else have anything before we break? We're almost at the top of the hour. No, this has definitely been a jam-packed coffee hour, but that's the thing, talking million-dollar deals and building wealth and these strategies. And now it's time to go implement and start taking action. And that's what it's all about. And it doesn't have to be I want to have 100 units. That it's like you just need one deal. You got to get the first deal first. Like, yeah, it's cool to have the big audacious goals. We got to have those goals, but all you need is one deal, and that's the very first deal that we're trying to get. And so, having those conversations with brokers and lead with value, being able to add value. I tell you guys all the time, invite them here, let them know, hey, I'm part of the investor club. We would love to have you come talk about what your company's doing, what you got, how you guys are looking to grow and expand. We would love to grow with you. We're buying in this area, and we'd love to have you come on the platform. And now you're not just a new investor coming in with no units, no experience. It was like, hey, I'm coming in as investor club. We would love to give you our platform to come share with our group and talk about, hey, why are people investing in this area? Why you're a great broker, or why you're a good property management company. So leverage the community to build your credibility and allow you to kind of get in some of these rooms and have these conversations with the right people that can bring you these deals. Because one deal can change your life. 124 unit with 100% owner financing that you're managing and you have 100% equity in, it's good. And that's the thing. I bought a 24 unit, I bought a 20 unit with 100% on the finance before. So it can happen. And I bought plenty of single family deals with seller finances. So we just got to get out here and have the conversation. I'm going to be doing a few more things on PropStream, which, PropStream is $100 a month, but it's worth it with the data and how you can pull certain lists and certain strategies with finding like tired landlords and how to go in and key in on some of the data there to get some really hyper focused lists that you can target and market to. And so we're gonna be looking at doing some of those things as well too, that you guys can kind of bring to your market. So with that, time well spent. See you guys next week. I know we got a couple things coming up. I have to go to Atlanta. I don't know if I'm making to. I'm still gonna try to make it to Invest Fest for at least 2 days. But I have to go to Atlanta for a land acquisition due diligence meeting the following week. Um, but also there is the Charm Real Estate Conference that's happening at Lake Gunnersville, Alabama. So it's kind of in between Birmingham and Huntsville. So that real estate conference, I'll be speaking there. It's the 18th through the 20th of September at Lake Gunnersville. So excited about that. Also, I'll be speaking on the 12th of September in Fort Worth, Texas, the annual Veterans and Real Estate Conference. That I think this is the third time going back there and speaking. So great event. So we'll be there in Fort Worth for that. And we'll be doing the virtual launch with the partnership with Right Time Financial. So extremely excited about that, the financial services that we'll be bringing in and access to a lot of these alternative investments that I talked about today. So we'll do a soft launch for that. And yeah, so a lot of things happening here over the next 6 weeks, but make sure as kids are going back to school here, they're already started. I think in Georgia, I saw on Facebook one of my buddies, their kids went back to school July 31st. I was like, oh my God, they're going back now in July. But so I know there's a lot of things changing, but find the time, put on your calendar your real estate time. It is important. Your time for building your business, building your investments, blocking on your time, spend that hour, 2 hours a day, and make it happen. Despite all the changes with the kids going back to school, there's a lot of distraction because life isn't going to stop. Life is going to continue to happen, but you got to block that time to make it a priority and start taking action and doing the little things to move the needle toward getting that next deal. So that's it. You guys be blessed, and we'll see you here soon.
Yep. Thank you so much, everyone. William, I'll get in touch with you so you can schedule the time for your, app. And Carl, please feel free to share the details of the deal with us so we can share it.
Okay.
Yes.
All right.
Thanks, everyone. We'll see you again next week.
All right.
Have a good day.
Bye.
Bye.
You too.
All right.